Did you know that traditional capital markets are worth over $120 trillion today? That's 3 times the size of all global stock markets combined, currently at approximately $40 trillion. Clearpool is disrupting this market and focused on building a new decentralized architecture and the building blocks for trillions of capital flow from TradFi to DeFi over the next coming years. It's essentially a decentralized capital markets ecosystem where institutional borrowers can create single borrower liquidity pools and compete for uncollateralized liquidity directly from the DeFi ecosystem. Anyone can be a lender and take advantage of these opportunities, which were previously only available to large institutions, whales, and those with high-level connections. So why should you watch to the end of this video and learn more about this project? Well, Clearpool is actually backed by the very best with the industry's leading investors, which include Sequoia Capital, Arlington Capital, Huobi Ventures, and some of my homies over at GBV. Shout out to you guys. They are also incubated by Asia's leading digital asset custodian, Hex Trust, which currently has $6 billion under their custody, and they're fully licensed in Hong Kong and Singapore, which ensures a regulatory-first, compliance-focused, and high-security approach for Clearpool. They're also ready to launch their mainnet, and they have a lot of high-profile borrowers that are ready to jump in. This includes Wintermute, Amber Group, FBG, and a few others. If these 3 reasons don't convince you, at least do it for yourself. Learn and educate yourself on these things because this is a topic that schools don't regularly teach. Also, if you haven't subscribed to our channel already, show us some love and click that red button. It only takes a few seconds. Now, onto the market.
Cryptonauts.
Digital asset adoption is growing exponentially, offering a lot of opportunities to investors. At this moment, there are over 360 active crypto hedge funds globally with a median average return of 128% and a total AUM of over $25 billion as of 2020. Together with other players such as market makers and trading desks, they form the institutional segment of DeFi's ecosystem. Despite the impressive statistics, crypto institutions do not have the same access to capital as their traditional counterparts. Traditional lenders do not extend credit to crypto institutions, forcing them to look elsewhere for liquidity. Borrowing in DeFi typically requires collateral, and in most cases, loans must be over-collateralized. This is an inefficient use of capital and is a major pain point for crypto institutions. In the crypto world, over-collateralization refers to the provision of collateral worth more than the amount being borrowed. Without access to unsecured loans, crypto institutions face major restrictions. Clearpool is the first decentralized marketplace for institutional liquidity on the blockchain. This is a paradigm shift in the way institutions borrow uncollateralized liquidity. Clearpool introduces 2 new core concepts to DeFi: single borrower liquidity pools and tokenized credit. These innovations allow institutional borrowers to access uncollateralized liquidity and provide lenders with a framework for the management of risk. Let's look at an example. John is a trader working at Alpha X Fund. He is looking to access a digital asset loan worth $10 million of USDC to execute a new risk-neutral trading strategy he's been working on with his portfolio manager. John has heard of Clearpool and wants to give it a try. Before John can open a single borrower liquidity pool, he must first make a proposal to the Clearpool community, providing information on Alpha X Fund and details of the loan requirements. During this process, John needs to verify the KYC status of Alpha X Fund with an approved digital asset custodian partner of Clearpool. Real quick, KYC stands for Know Your Customer, which essentially means you need to provide your personal information to verify it's really you. Clearpool will obtain Alpha X Fund's real-time portfolio risk metrics from information generated by both on-chain and off-chain data sources, providing the Clearpool community with comprehensive credit profiling and assurance that Alpha X Fund is actually trading responsibly. Now, the Clearpool community has all the information they need to reach a consensus decision on the whitelisting of Alpha X Fund, which is done through a governance voting process. Once whitelisted, John can now launch the Alpha X Fund liquidity pool on Clearpool, where it will be visible to all potential liquidity providers when they connect to the app. These details of Alpha X Fund's liquidity pool will now be available to Alice, a potential lender looking to take advantage of the yield opportunities available on Clearpool. Alice can select the specific institutions or type of institutions that she wants to lend to. She has the ability to go up or down the credit curve, selecting a specific risk-reward profile, or she may diversify her lending activities across multiple pools through Clearpool governance-created thematic pools. Alright, so bear with me. Thematic pools are governance-created multi-borrower liquidity pools that conveniently provide LPs with the benefits of diversification. Liquidity supplied to a thematic pool is algorithmically distributed to multiple borrowers and periodically rebalanced as per the pool's governance approved mandate. Once Alice has provided liquidity to Alpha X Fund, she will receive CP tokens in return. CP tokens represent the amount of liquidity supplied and accrue the interest rate and LP rewards for that specific pool. CP tokens also represent the risk profile of the pool's borrower. Tokenizing credit allows Alice to trade the risk that she has taken on by funding the Alpha X Fund pool. Tokenized credit paves the way for introducing further risk management and hedging solutions such as credit and interest rate derivatives. Now, interest is paid in the currency of the pool, whereas LP rewards are paid in C-Pool, Clearpool's governance and utility token. Let's talk more about the C-Pool token, shall we? C-Pool provides its holders with several benefits, including additional rewards when staking C-Pool, voting rights for the whitelisting of new borrowers, governance rights since C-Pool holders will guide the future direction of the protocol once it is fully decentralized. Staking C-Pool will be a required action for borrowers and optional for the rest of the community. However, holders who are staking their token will qualify for greater rewards when it comes to voting and participating as an LP. Protocol revenue will be used to buy back C-Pool in the open market, ensuring the sustainability of Clearpool's lucrative reward pools. So what about Adam, a retail investor and crypto enthusiast? Can he participate in the protocol? Yes, he can, and you can too. Clearpool will be available to both retail and institutional lenders. Retail investors can benefit from the innovations and yield opportunities that Clearpool brings to DeFi, as well as participating in whitelist voting, governance, and staking. C-Pool tokens are listed on decentralized and centralized exchanges, making this project accessible to everyone. These are the first building blocks of a decentralized capital markets ecosystem. These guys are really pioneering the way, and I'm really excited to see what they're going to do in the future. If you want to keep up to date with their project, follow them on Twitter and join their Telegram. The links are below. From all of us here at Cryptonauts and Clearpool, we hope that this video helps you understand more about finance, crypto, and its markets. We worked collaboratively to produce this script, so big ups to them for explaining it in an easy way for all of us to learn. Also, if you want to learn more, check out their website, which is also in the description. As always, hodl, secure your crypto, and may Satoshi and Vitalik be with you always.